All right, welcome again, guys, to another episode of the Barita Brain Trust podcast. And today we're very excited to have Ramon Small-Ferguson, Vice President of Asset Management at Barita Investments. Ramon?
Thanks for having me, Raul.
Yeah, man. So what we want to talk about today, you go around Jamaica, you can't miss the Burrito #1 unit trust billboards, right?
Yes.
So we just want to talk a little bit about what that is and what is the opportunity it presents for investors.
Sure. All right. Well, Barita Investments has been in the business of managing the money of others through the asset management business, through unit trust, since, I think, 1991. And as a consequence, we have built up, I think, a lot of competencies internally with respect to doing it well. And that has shown through the fact that in 2018, we had the best performing unit trust in Jamaica, our capital growth fund. And that has continued so far into 2019. We've been leading the market in terms of performance in that fund as well. And as a result, we've been creating a good bit of wealth for our investors. So we're quite happy with that.
Okay. So you would say the capital growth fund represents a good place for investors to place money long term.
Well, that's a good point in terms of, who is this fund for, right? So there are several elements of the fund that kind of point you to who should be investing in the fund. The first thing is that the minimum investment in the fund is 100 units, which right now works out to between $9,000 and $10,000. So that's the first qualifying factor. The second thing is that, as you highlighted, I don't know if it's coincidentally, but the fund has a long-term horizon. So the fund is invested predominantly in local equity securities. And as a consequence, we know that equities generally do better for investors over a medium to long-term horizon. So it isn't for somebody who, for example, has a cash need in a couple of months and wants somewhere to park the cash. This is for investing for the medium to long term. And because of that longer term horizon, it really speaks to the risk associated with it. Equity securities are generally volatile. I mean, over the long term, they do give you good returns, but there is a bit of up and down in between. So it really needs to be an investor who understands that risk and is both willing and able to take that risk.
Okay. So I see the billboard and I'm excited. So I come into Barita and I make a big investment, right? Big investment from your capital growth fund. And then next 3 weeks, we just see the price go down.
Yeah.
So I'm not say, I want to call Ramon and give him a talk,
Oh boy.
What kind of advice do you have for me?
Yeah, so I mean, it's very important for investors to have the right expectations with respect to the performance of this fund, right? So as I mentioned, it's been doing particularly well, and that has been driven by the overall buoyancy of the local equity market, right? But there are periods where there will be a lull. I mean, the performance might be very underwhelming. It might be negative because of the overall what's going on in the market, what's going on in the economy, etc. So an investor who comes into this fund should expect that there are going to be periods of volatility. That period might be 1 month after you start, 2 years after you start, but there are going to be periods of volatility. So they should have the stomach for, as I said, the ability and the willingness to take on the risk associated with this fund. And this fund is on the higher end of the risk spectrum if you were to look at our suite of funds.
Okay. So you said Barita has been in the business from the 90s.
Yeah.
So what has time told about this particular fund? Like from inception, how's it been doing? What can we expect it to do going forward?
So since Barita has been managing money through this equity fund, the market has gone through a lot of ups and downs. But over the last 20 plus years, this fund has actually produced an average annual return of now 20%.
Really?
So, if you put that into context, given what has happened over the last 20 plus years in Jamaica, generally, in all asset classes, that's pretty solid. Yeah. So, time is, I think, the best teacher. And, to have that comprehensive history of performance really speaks volumes to the company's ability to manage money. So we encourage all our investors and prospective investors to use that as a basis to set expectations, knowing, however, that the past isn't necessarily a guarantee of the future. You know?
Okay, so 3 weeks is one thing, but the time-tested number is yeah. So okay, so it's not a guarantee, but the buoyancy that you're talking about, what has driven that buoyancy?
Well, I mean, the buoyancy in the local equity market, or at least this latest bout, kind of started in 2015, post the market really digesting the effects of the latest round of engagement with the IMF, which started in 2013, and the resultant changes in the market. So what really happened is interest rates took a nosedive, largely because of the national debt exchange, which took place in 2013, where the government exchanged local bonds with higher coupons for longer term bonds with lower coupons.
Okay.
And that really changed the interest rate dynamic in Jamaica. So rates went down. We started to get a bit more support from international multilateral agencies because the IMF was actually here and on the ground. And generally speaking, investor confidence external to Jamaica about Jamaica started to rise. So with market conditions getting a bit better, that confidence started to seep into what was going on in the local environment. And we can't ignore that international factors were very kind to us. Globally, rates were low and got even lower. Oil prices also took a huge nosedive throughout the period since 2015 to now. And all these factors really allowed Jamaica to benefit, and it really trickled through and translated to improvements in terms of investor confidence locally, in terms of market conditions with respect to liquidity, low interest rates, and also in terms of corporate earnings. So all of that has really been, I think, the wind beneath the wings of the market over the last, what's it been now, four approaching 5 years.
Okay. So you mentioned international, and we want to come back to that. But just to put a bow on the capital growth fund and the local stock market, it's been a buoyant time for all the reasons you mentioned. How has the capital growth fund performed relative to that broader and buoyant market in Jamaica?
Well, as I mentioned, I mean, the fund has been definitely taking very strong cues from the broader market. We outperformed in 2018. We've been leading the market so far in 2019. But yes, investors in our fund would have gotten an excellent proxy to the overall performance of the market over the last several years. So you wouldn't have missed out. Okay. You would have gained greatly investing in the capital growth fund.
So it's fair to say a lot of excitement about Jamaican stock market, internationally and otherwise.
Yes.
But the capital growth fund's performance is even more exciting than that market performance.
Well, naturally, I would say so, for sure. You know.
And then, incidentally, I figure Barita stock probably most exciting of them all.
Yeah, I mean, Barita stock has really been on a tear. Barita stock has outperformed the market since we listed in 2010. And we've been the best performing stock over the last 18 months or so. I'd say we were the best performing stock in 2018 for sure. Yeah, but no, we've been doing pretty well.
What kind of return in 2018?
So it's a big number. I don't usually struggle with big numbers, but this one is giving me a challenge.
Yeah, I think we can call it a sufficient rate of return.
Yeah, more than sufficient.
Yeah, no, quite impressive. Yeah. So, all right, but okay, so you mentioned international, right? Yes. Suppose I'm an investor that is interested in international exposure from a stock point of view.
Yeah.
And does Burrito Unit Trust have a solution for me?
Yeah, we do. So, what we try to do through our unit trust product is make investing accessible to the common man. So I mentioned to you before, you can start a capital growth fund account with $9,000 and you can immediately get a diversified portfolio of local equities. You can't quite create that on your own with $9,000. So we also have an equivalent version for international stocks, which is our FX growth portfolio, which invests again predominantly in international stocks, primarily US, but global stocks. And that fund is actually up, I think, about 13-14% year to date. I mean, it's been a challenging market to invest in globally over the last 18 months or so, given the significant volatility in the United States, which started in the last quarter of last year. But, as I said, year to date, in US dollar terms, that fund has eked out a return of between 13 and 14%. So that fund is the way how investors can play the international stock markets through Barita Unit Trust.
And that's 13% on US dollars.
On US dollars.
So suppose the stock volatility is too much for me. I don't want exposure to stocks.
Yes.
Is there an investment I can make with Burrito Unit Trust that?
Yeah, so the thing that we try to do is to provide investors with options that are across the risk spectrum, right? Because investors have different profiles and they also have different investing needs. You might want to invest for a couple months while you wait on a house to close. We have a fund for that. So yes, we do have funds that are lower on the risk spectrum. We have a money market fund, which is Jamaican dollar denominated, which really attempts to give investors a better rate of return relative to other short-term options like bank deposits, repos, etc. And that fund has been in operation since 1991. So it's a classic, among the suite. We also have another fund which is geared primarily towards US dollar denominated investors, which is our FX bond portfolio, which, as the name suggests, invests primarily in foreign currency bonds, both locally and internationally. And year to date, we've actually been able to produce a return of about 6% on US dollars. We've been on a tier since May or so. We started a little slow, but we're now north of 6%. And I think our investors are pretty happy with that return. So those two funds are lower on the risk spectrum. I'd say the money market fund is the lowest risk fund that we have in our suite, but the FX bond fund is certainly of a lower risk in terms of characteristic than the two equity funds that you mentioned.
Okay. So you're saying I can come into Burrito and I can put money to work in a diversified and balanced way.
Yes.
Where my advisor, I guess, would work with me to really accumulate compound wealth at a faster rate than if I say I'd sit down with it at home, a mattress or just in the bank account. Well,
I wouldn't advise anybody to use the mattress at all. But what I would say to you is that the funds allow you to invest in a very convenient way, right? It provides you with lower minimums than typically the asset class is called for. Diversification. You get the experience, you get the benefit of having an experienced and dedicated set of fund managers, research personnel, etc. That their job is to day by day, and I said they, but my job as well, is to day by day look at the portfolios and, really apply prudence, etc., to try and generate maximum value for you. So in that context, it really provides you with a less stressful way, I'd say, than to figure out which stock do I buy, which stock do I sell, how do I spread out this modest amount of money that I may have across all these different assets. The funds do that for you. So I'd say, for any investor, large or small, there is some merit to looking into using unit trusts as a way to diversify and to grow your wealth.
Okay. And if you could just speak a bit about the accessibility, the liquidity of these investments and the tax efficiency.
Yeah, sure. So generally speaking, these investments are pretty liquid. For the equity funds, for example, if you come in today and invest, we typically impose what we refer to as a 90-day lockup period. Okay. You can access your funds during the 90 days, but there is a penalty. And the reason we have that is because once you come in today, we deploy the money into equity securities. It does present a little bit of a challenge for you to come back tomorrow and say, hey, guys, I need my money back. Right? Yeah. So that's really the only limitation that is imposed to your liquidity. You can get your money back, but there's a penalty. After 90 days, you can feel free to encash at any time. You put in your encashment request and you typically get money next day or within 2 days. So it provides you again with a lot of liquidity as opposed to you having an equity portfolio of 10 stocks. You wanting some cash from that portfolio and you having to tell your advisor, can you sell these 5 at these various prices and hope that the market is kind and it will allow you to encash. So that's another advantage. Thanks for highlighting that the liquidity that these funds provide to clients. Yeah.
Okay, and as far as taxes?
Oh, well, with respect to taxes, so I generally shy away from giving tax advice. But there are elements of certain other funds, like for example, the Capital Growth Fund, that will provide some investors with tax benefits because, these funds invest in assets that produce capital gains as opposed to income. There may be some investors locally and internationally that might benefit from no taxes or a reduced tax rate as a result. So we encourage persons to check it out. I mean, sometimes seek independent tax advice to see whether they qualify. But for that fund, for example, we pay out distributions, gross. There are no taxes withheld at source.
That's what we want. I was trying to get at.
Yeah,
So as far as this investment, it's not withholding taxes.
No, not at all.
All right. Well, at the end of the day, as a man in charge of Barita Asset Management, what do you want to say to the marketplace and the investing public about, in summary, about Barita Unit Trust product and whatever else?
Well, I mean, what I'd like to say is that, we think we have the experience. We think we have the demonstrable track record with managing money through our asset management vehicles, our unit trusts. We are also pension fund managers. And, we think our products represent an opportunity for the ordinary Jamaican, anybody really, to come in and start the journey of growing their wealth. So I'd encourage you all out there, come in and let's see what we can do for you. Let's get you in front of an advisor and see how we can help to revolutionize your relationship with wealth.
Ramon, Small-Ferguson, thank you very much
for
joining us, man.
Yeah.
All right, guys. So that's it for this time with the Burrito Brain Trust podcast, and we look forward to seeing you next time.